There's a couple of ideas that I'd like to run by you to get your thoughts on. If you could leave those thoughts in the comments below, I would appreciate it. I'm looking at, wow, bad kitty, looking at the caterpillar right here. Caterpillar, the CAT, the cat, the kitty cat, currently down 74 cents. And they have announced a $1.20 dividend with an ex-dividend date of April 21st. What is the play there? One could be you just buy the stock right now because it's down today. Enjoy that dividend. Lock that in. Let's take a look over here at the Seeking Alpha. Caterpillar is a great company. Incredible balance sheet. They've been around for ages. Have a great product. Got a hold, and a strong buy by the quantitative beep, boop, boop robot heads. Dividend, let's just take a look here. So you've got the 213 dividend yield, 29 years of dividend growth. Hello. 5-year growth of nearly 9%. Pretty good. Super low payout, $33.96. So will you? So I'm thinking out loud, of course. That's usually what I do. I don't pre-plan anything like I should do. If I wanted to create some high quality videos, I would do that. But I just like to click the record button and get on here with you, my new best friend in stocks, dividends, and options. So a couple ways to look at it. In fact, we could do this a couple of different ways. Just in the meantime, we could buy 100 shares right now, lock in that dividend for ourselves, and the first sign of a green day, we can sell one covered call contract, right? In fact, let's look at that premium. If we looked at the premium, so here is currently the action on Caterpillar. Boop, 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 making some moves today. It was all the way down to 222.50. Recently at 224.78, and now currently at 224.52. Now, if you look at year to date, is this year to date? No, that's 5-day. Let's go to year to date on Caterpillar. Just recently, they were as low as 209.17. And if you've been watching the videos, then you probably did see I messed around with some Caterpillar, selling some puts, collected some nice premium, and stuffed it into our pockets. But another factor is also, if you look here, they have an earnings date coming up. It's going to be between April 26th and May 1st. And I think, what do they have? Do they have the earnings date here? Zacks has it at 4/27. Okay, so what's that, next Thursday? And they feel like they're going to beat current estimate of 378 a share, earnings per share, and they feel they're going to come in at 387. Now, I don't know if they're just shaking up the magic 8-ball and asking it what Caterpillar's earnings per share is going to come in at, or if they have, a crystal ball. Maybe they have an insider over there at the Caterpillar. I don't know. So we could do a couple of things. One, I'm fine owning Caterpillar. Always you want to get the best price possible. So this is probably not that price. But again, when it comes to dividends, if you're good with the yield, right? If Yeezy is good with the yield, then the price doesn't really matter. And we could always bolster that return by selling covered calls, correct? Or do we roll the dice and take our chances, thinking that maybe if we have another red day tomorrow, Thursday, possibly into Friday, because on Friday, technically, according to the dividend research that I've done, their share price should go down $1.20 that day, because that's what they said they're paying in their dividend. On an ex-dividend dates, it seems that the share price goes down by that number. So it could be a double dip, maybe a triple dip. So you have another red day tomorrow. Maybe it sneaks down another 50 cents or so, and then goes down another $1.20 on Friday. And yes, at that point, you've already missed the dividend. However, could you sell some puts based on earnings volatility? Because if they're going to have earnings on the following Thursday, not sure why I can't get a straight answer on that. Let's go here. Caterpillar. Yeah, this says the same thing. So that's April 27th. That's next Thursday. But so the volatility should be looking higher if we look out to next Friday's expiration. If we look at this put volatility, that's much higher than it normally is. There it is at 43.25. Okay, and that's at a 217.50. Not sure there's a 217.50 this week. Yeah, it's right there, 217.50 with a volatility of 35. So not a huge difference, but it is a difference of volatility. So it could be an opportunity to roll the dice, wait a couple of days, watch the share price maybe trickle down some more, take advantage of the volatility with earnings upcoming, trade into some puts expiring next Friday, and then look to trade out of them as soon as Monday or Tuesday. Catch in the theta over the weekend with the idea that maybe we can open green a couple of days and we'll be in the profit. I don't know, even if we're just 50% into the profit, take that risk off the table, put the dollar bills in our pocket before earnings even happens. So we don't have to live through the nail biting in that regard. That's an opportunity. I think that's actually the opportunity I'm going to look for. So we'll keep an eye on it. Here it is at 224.40 as we speak. We'll see where it is tomorrow, and then on Friday, when that ex-dividend date does arrive, and then see if there's any potential for us to sell some puts on Friday, just expiring 7 days out, into the volatility of earnings. So we'll check it out. In the meantime, let's take a look at the SPY, because soon our plan will be to put on our daily trade. We've switched our thesis up a bit. I haven't been doing any 0 days to expiration trade lately. You've probably noticed. I have been doing 1 day to expiration, trading at the end of the day with an expiration the following day. Okay, so we'll look at that as far as premium is concerned. And then I've got the 14 days to expiration trades that I'm stacking up with the hope of, I don't know, bringing in 50 to 100, preferably $100 a day, stacking up $100 bills per day on the 14 days to expiration trades. We'll be putting that spreadsheet out soon. And as we're looking at it right now, SPY is going downtown to Chinatown, chasing the red baloney pony right on down the line here. So if it keeps going red, then our trade will change from a call credit spread to a put credit spread. But a lot of action has been going on towards the end of the day with a lot of green, more green than red, I've noticed. And if you know anything about that, maybe there's just something to that I don't understand, but I don't know why it's doing that. But that has been going on more times than not at the end of the day. So we'll keep looking at that. It's 2:36 p.m. I'll probably check back in about 15 minutes with less than 10 minutes to go in the trading day. And then we'll see what we're going to do. Are we going to put on a call credit spread 14 days out, or will it be a put credit spread 14 days out? Thanks for tuning in. Subscribe, like, comment, all the good stuff, and I'll see you in the next video.